We've seen a nice little bounce today. We'll see if it holds. But is this an area of the market that still is feeling good to you right now for future investment?
Sure. So investors are feeling good because the month of July was one of the best in quite a while. It was a really long hope for bounce in a year that's had little in the way of good news for investors. I think the reason it's happening is the earnings season is coming in much better than a lot of investors had feared. Companies have shown resiliency in their ability to pass through inflationary cost increases to consumers. They're clearing a relatively low bar, but hey, profits are still growing. And that means that this bear market has some potential to peter out.
Okay, so Mark, if that's the scenario, I mean, first of all, do you agree? And then second of all, is this a scenario where we should all be bracing for potential downside, significantly so?
Hey, thanks for having me on, Dom. Listen, I definitely hear a lot of trepidation with my clients when I talk to them every day in regards to going into this market because of what the Fed's doing. The Fed is aggressively raising rates. Look what happened in the last 4 months with rates. And you're seeing that trickle down all over the economy, from real estate to mortgages and how folks view getting into real estate right now. That's what's happening. And so as long as the Fed continues tightening, I think many investors are going to have some trepidation about getting into this market because what they're doing is intended to slow down the economy.
Mark, you mentioned the conversations with your clients right now. What kinds of conversations, Mark, are they having with you about the types of things that they want to be invested in at this point? I mean, I know that it all depends on time horizons and risk tolerances, but do they ask you more about things like mega cap tech, or do they ask you more about things like small caps or international stocks? What's the interest like right now?
Yeah, many of my clients, believe it or not, are asking me about treasuries. I mean, you'd be surprised of how many clients right now are very cautious right now going into the equity markets. We've had a little bit of a run in July, but if you can see what's going on, we had a Fed who says they're maybe slowing tightening. That may not happen if the numbers continue to what they see in regards to energy, food costs, et cetera. And so in that environment, many of my clients want to kind of stay with a little, stay nimble, stay in cash, stay in treasuries. They're not really asking me to get into these tech sectors because if you've seen over the last few years, they're up 100, 150%. And if they're down 40, you could potentially have a little bit more to go here.
Andy, I mean, we've said it a number of times over the course of the past decade plus. Market rallies over that time have been led since the great financial crisis by the same kinds of stocks. It's Apple, it's Microsoft, it's Alphabet, it's at one point Meta platforms. Mega cap tech seems to be the safety trade. People kind of turn to it in times of distress and they turn to it in times of dips. Is mega cap tech still a place you'd like to be?
So mega cap tech is a place you'd like to own at a market weight. What I see when I see it is I see Amazon, a world-leading cloud computing company, and of course a world-leading delivery to the door company. Apple, a world-leading smartphone maker. They're not going anywhere. They've demonstrated an ability to continue to maintain their cost structure and grow profits even in a pretty tough environment. But there's a lot more breadth in the market, and you're starting to see a resurgence in industries that have had a really tough 10 years. Case in point, energy. Energy had just had a blowout quarter in terms of their ability to grow earnings. And frankly, in my opinion, it's just the beginning, because even if oil stays at about a $90 to $100 a barrel price, they can continue to make a stupendous amount of cash flow on the back of all the cost cutting they've had to do over the course of the past 10 years. So there's a lot more breadth to the market. And I think that's important because it means investors have a lot more options. Investors like to have choices. They like to have the ability to pick and choose sectors and not feel like they're in a trap where they can only buy a handful of 5 or 6 stocks.
All right. And Andy, before we let you go, just a couple seconds left here. Outside of energy, where else would you be?
Sure. Other areas that are attractive today is healthcare, in particular medical devices, on the back of growth, or actually a resurgence, back to normal of medical procedures that have been put on the back burner during COVID.
Okay. And then, Mark, last word to you here. Favorite stock or sector out there?
My favorite sector is financials. In a rising rate environment, historically, financials have outperformed because of net interest margin and increased profitability with mortgages and credit cards. I'd be with the banks.